As of Friday, April 24, 2026, the stock market is currently open, and NUBURU, trading under the ticker symbol BURU on the NYSE American, is priced at $0.3705 per share. The stock has seen an incredible intraday surge, climbing 28.38% from its previous close of $0.2886. Earlier in the session, we saw it hit a high of nearly $0.44, representing a massive swing in volatility that has caught the eye of day traders and speculative investors alike. This isn't just a random blip on the radar. The volume behind this move is significant, and it's happening against a backdrop of a complete structural overhaul of the company itself. If you've been watching the broader tech space, you know that Nvidia stock or Tesla stock usually steal the headlines, but in the microcap world, NUBURU is currently putting on a masterclass in price action and narrative shifting. The expectation from the average retail investor looking at a chart like this is often one of two things. Either they think it's a pump and dump because of the low share price, or they see it as a lottery ticket that might return to its former highs of over $4. But the reality is far more complex and arguably more interesting. While many people see a struggling laser company, the actual shift happening involves a pivot into high-stakes defense and electronic warfare. This isn't just about cutting metal with blue lasers anymore. They are positioning themselves in the $20 billion counter-drone market, an area where the US government is currently desperate for solutions. If you've spent any time on popular investing sites lately, you'll notice that small-cap defense stocks are starting to decouple from the general market noise. The contrast between what people think NUBURU is, a failing industrial laser firm, and what it is trying to become, a software-driven defense platform, is exactly where the tension lies in this stock's valuation right now. Looking at the recent trading volume, it's clear that institutional activity is beginning to stir. While many individual brokerage accounts are just now seeing the notification on their phone, larger players like Millennium Management and Geode Capital Management have already been maintaining or increasing their stakes. This suggests that the smart money is looking past the massive $79 million net loss reported for 2025 and focusing on the recapitalization efforts led by Executive Chairman Alessandro Zamboni. When you see a co-CEO indirectly acquiring $1.5 million worth of stock through entities like Vanguard Holdings, it sends a loud signal to the market. Most people using a Robinhood app or browsing through Fidelity Brokerage for a quick trade might miss these SEC Form 4 filings, but they are the bedrock of understanding why a stock suddenly jumps 30% on a random Friday morning. In terms of market momentum, BURU is currently navigating a very tight corridor. We have support sitting around the $0.19 to $0.21 level, which held firm during the recent consolidation phase. Today's breakout above $0.35 is a major technical win for the bulls. If it can hold these gains through the afternoon, it sets the stage for a potential run toward the $0.5 mark, though the 52-week high of $4.24 still feels like a distant memory for long-term bag holders. If you are doing your own online investing, you have to weigh this intraday excitement against the heavy dilution from recent $12 million public offerings. This is the classic battle on SoFi Invest or Interactive Brokers. Do you chase the momentum of a 28% gain, or do you wait for the inevitable cooling-off period that follows such a vertical move? Beyond the price action, the real driver here is the transformation plan. NUBURU is essentially trying to buy its way into a new identity. They've been snapping up stakes in companies like Techni, an Italian defense contractor, and Lyacon, which specializes in laser engineering. They even made a strategic move into Heckler & Koch AG to gain access to defense customer networks. This is a very aggressive, high-leverage strategy. They are using convertible notes and receivables to fund these acquisitions because, frankly, they don't have the cash flow from operations to do it otherwise. This creates a high-risk environment. If the integration of these companies fails, or if the US government demonstration of their counter-drone technology doesn't result in a signed contract, the floor could drop out. It's the kind of high-wire act you don't usually see outside of a biotech startup. To really understand NUBURU, you have to look at what they actually do. Founded in 2015, they started with a focus on blue laser technology. The science was sound. Blue light is absorbed by metals like copper and gold much more efficiently than traditional infrared lasers. This was supposed to be a massive advantage for battery manufacturing in the EV space. If you're holding Apple stock or looking at the semiconductor side with Nvidia stock, you understand how important precision manufacturing is. However, the industrial market didn't adapt the tech fast enough to keep NUBURU in the black. They were burning cash and lost their core patent portfolio through foreclosure. That would usually be the end of the story for most companies. Instead, they decided to pivot to defense. They are now focusing on directed energy systems. Think of these as high-powered lasers that can dazzle or disable drones and other electronics without using traditional ammunition. They recently secured a $250,000 order for a portable laser dazzler system from a government-owned defense electronics organization in the Asia-Pacific region. While $250,000 sounds like a drop in the bucket compared to their $200 million accumulated deficit, it's the proof of concept that matters. It proves that a customer is willing to pay for this new direction. For someone using a SoFi active investing account or Schwab Intelligent Portfolios, this is the speculative part of the portfolio that either goes to zero or multiplies by 10. The company is also deeply involved in the Ukraine initiative, working with Techni to deploy the Gralion military vehicle platform. This is a tactical vehicle that can be used for demining operations. By tethering their laser tech to these vehicles, NUBURU is moving from being a component supplier to a full-on platform provider. This is the reality that is currently fighting against the expectation of bankruptcy. The company's auditors previously raised substantial doubt about its ability to continue as a going concern, but management is targeting positive shareholders' equity by the second quarter of 2026. We are in that window right now. If they can pull it off, the BURU ticker could be one of the most significant turnaround stories in the microcap sector this year. When you're looking for investment help or exploring different investing sites, it's easy to get overwhelmed by the sheer number of options. Whether it's Fidelity mutual funds or diversifying through various Fidelity ETFs, most advisors will tell you to stay away from stocks trading under $1. And usually that's good advice. But for those who engage in self-investing and are looking for that specific defense angle, NUBURU represents a very specific bet on the future of non-kinetic warfare. Comment below how many shares of BURU you currently hold, or if you think the shift into the defense sector is just a temporary distraction from their financial troubles. Getting the community's take on these microcap plays is always fascinating, because the sentiment can shift as fast as the stock price. Let's talk about the risks for a moment, because they are significant. This is not a set-it-and-forget-it investment like holding a broad market index on your Robinhood app. First, there's the listing compliance. The NYSE American has strict rules about share price and equity. NUBURU has had to perform reverse stock splits in the past to keep their head above water. Second, the defense industry has incredibly long sales cycles. You might get a prototype funded today, but it could take 3 years before you see a multi-million-dollar production contract. Can NUBURU survive that long? They recently reported cash reserves of about $24.7 million, which is a massive improvement over the $0.2 million they had a year ago, but in the world of defense manufacturing, that money can disappear quickly. Institutional players using interactive brokers or professional Fidelity trading platforms are watching the Golden Power approval in Italy very closely. This is a regulatory hurdle they need to clear to fully acquire Techni. If that gets blocked by the Italian government for national security reasons, NUBURU's European strategy falls apart. This is the kind of detail that doesn't show up on a simple stock screener, but can make or break the investment. It's the difference between a calculated risk and a blind gamble. When you invest online, you have to be your own lead researcher, especially with companies that are essentially reinventing themselves in real time. For those using a SoFi robo-advisor or Schwab Intelligent Portfolios, you likely won't see BURU in your automated holdings because it doesn't meet the stability criteria for most algorithms. That's why individual brokerage accounts exist, to allow for these types of high-conviction, high-risk plays. The current market environment, characterized by geopolitical tension and the rapid proliferation of drone warfare, provides the perfect backdrop for NUBURU's technology. If they can successfully demonstrate their mobile directed energy platform to the US government soon, the market reaction could be even more explosive than what we are seeing today. As we head into the final hours of today's trading session, the big question is whether BURU can close above the $0.35 resistance. This level is psychologically important for traders. If it closes strong, we might see continued momentum into Monday. If it fades back towards $0.3, it might suggest that today's move was just another short-term spike driven by news trading bots and retail FOMO. Regardless of the daily swing, the long-term narrative of NUBURU has fundamentally changed. It is no longer just a laser company, it is a defense conglomerate in the making. To recap the situation, the expectation was that NUBURU would fade away after its industrial laser business stalled and its patents were foreclosed. The reality is that management has aggressively pivoted, secured millions in new funding, and is now actively delivering prototypes for international defense contracts. We've seen the stock price react today with a massive 28% jump, currently sitting at $0.3705, and the volume suggests there is real conviction behind this move. Whether you're trading on the Robinhood mobile app or managing a complex portfolio through Fidelity Wealth Management, BURU is a stock that demands your attention, not because it's a sure thing, but because it's one of the most high-stakes corporate transformations currently playing out on the public markets. The contrast between the company's $200 million accumulated deficit and its current $57 million market cap tells you everything you need to know about the risk-reward profile. Investors are essentially betting on whether the new NUBURU can outrun the ghosts of the old NUBURU. With a co-CEO putting his own capital on the line and a $20 billion market opportunity in counter-drone tech, the pieces are on the board. Now it's just a matter of execution. Keep a close eye on the upcoming Q2 equity reports and any news regarding the Maddox Defense joint venture. These will be the next major catalysts that determine if this intraday surge is the start of a new chapter or just a temporary highlight in a challenging story. Authority in this market comes from looking past the ticker price and understanding the machinery of the business itself. And right now, the machinery at NUBURU is working overtime to change the narrative. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video? Comment your thoughts? Share with your friends? Subscribe for more updates.